Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, see what is going on in social media. If you want to follow me, it's @finance. And if you want to join our community, finding-value.com, which is also in the lower corner there. You can join and you can have some savings with the special coupon code. We do have a question and answer session coming up on Saturday, 7 a.m. Mountain Time, where you can interact with me directly through Zoom. You do not need to be there. They are recorded and uploaded to the website if you miss it. So starting with Lance, he says, Powell, we have a longer run shortage of housing, and we also have high rates right now. I think the best thing that we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. I'm not exactly sure how he's going to do that, but he is correct. We do have a longer run shortage of housing. The mismatch is a few million homes that we are short in relationship to family formations. That is part of the cycle. The cycle that we are in, what they do is rates go up when you get a shortage of homes. House prices and rates generally go up together, and I guess most people can't wrap their mind around that, even though it makes perfect sense to me. As home prices go up and as the demand for, actually, home prices and inflation, they basically go up together historically. If you were to kind of take out the fiscal situation that we're in today. But generally, more money gets created as the demographics enter home buying years. More people entering home buying years puts pressure on the real estate market. Real estate prices rise with inflation, and interest rates generally go up with home prices. There's a slight correlation with what I just said right there, looking at history. So it is more correlated with rates increasing and home prices increasing simultaneously than it is the other way around. Usually when rates fall, the market is in trouble and house prices don't go up as much. Renmac, the unemployment rate remains low and labor market conditions remain solid. And he says, sorry, the labor market conditions are not solid. To the extent the Fed believes it has time because of solid labor market conditions, it creates downside risks to the outlook. He has to say that, guys. There's no other way that he's going to come out and say that the labor market looks like garbage, because they have a dual mandate. Powell does. He knows that we have a longer run shortage of housing, which is going to create inflation, but he's stuck in the middle with the unemployment rate it's been moving higher. So what's he going to do? Lower rates, launch inflation, and try to save unemployment? Or is he going to eat a little bit of unemployment, which I think he's perfectly okay doing, as he said that before, and try to slow down the inflation? Now, we've got fiscal spending in the back, they're spending like heck. So I don't know if interest rates are going to be as effective as they were historically. So they're spending, fiscal spending, interest expenses, all this stuff. And he's like, well, we'll leave rates up there, which basically slows down the economy. Unemployment goes up, but he can't shut off the fiscal spending. So he's stuck. I don't know what he can do. Usually, if unemployment rate goes up, they lower interest rates to spark the economy and get it back going. But if you have a problem with inflation, I don't know if he can lower the rates. Like, it's not just, oh, we're going to lower rates. They have to get in the bond market and start buying it down, doing massive quantitative easing because they're rolling over a heap of bonds. We're talking like $9 or $10 trillion this year. it's a ridiculous sum of bonds that they're rolling over. He's in a difficult situation. The IEA doubles down on peak oil demand forecast. And we're getting all these headlines coming out where they're trying to push this bearish narrative. Oil prices are going to steamroll them, and they're trying to control it through job owning. Job owning is a tactic that Powell and Trump have been using to try to control markets, to push things down. They're also using the news and articles to try to slow the move. I don't think they're going to be successful, but there it is. The IEA doubles down on peak oil demand to try to get people out of oil. They're trying to slow the move. Jesse Day says, and the bullish news keeps piling on. I find it funny when people ask, when will uranium take off? URNM is up 260% in the last 5 years. DNN is 440%. NXE is up 436%. We are in the uranium bull market. It's not some distant event. The only question is, which inning are we in? I'm looking at previous commodity bull markets and using some patterns that I compare to, and I'm not going to show those. I showed them on the website and I showed them during the midweek update. I think that we are very early in the bull market. If I were to guess, it would be like 2001 or 2 of the last bull market. You can go back and look at charts. You can compare the charts, and that's kind of what I think is left. It would be probably 4, 5, 6 years. Now, it could be more than that. If we have problems with fiscal spending and fiscal continues to just pile money into the market, that would be a problem. And it's going to be an inflationary pressure that will expose shortages in the market. We also have problems with oil coming up over the next couple of years, I think. If those manifest, I think we could see interest rates continue higher. They're going to have to get fiscal spending under control, but they can't because of the design of the system. And uranium is going to go up with oil, I think. I think we're going to see $3, $4, $5, $600 oil price and uranium per pound price. They're going to be roughly the same price. I think it's going to peak somewhere early to mid 2030s, maybe, is my guess. And we are in the bull market. We've had a big pullback. It's starting to go back up. I think we're in wave 3, and we've got a long way to go. A lot of people, what they're going to do is they're going to try to time the short term. They're going to sell. We'll get a big move higher, and they're not going to be able to get back in. Psychologically, it's very difficult to get back in. So I think we're in it. I think we're starting another leg. And what I'm doing is I'm not selling anything. Powell says we remain laser focused on our dual mandates of privatizing profits and socializing losses. I started laughing when I first said that. I was like, you know what? That's exactly what they're doing, though. They are privatizing profits in the banking system, and if they lose, they socialize the losses and bail out the banks. Exactly what they're doing. Coming down here, platinum's now over $1,300 an ounce. I pounded the table at $800, $900 an ounce. I'm still hearing complaints about how platinum hasn't moved. I was ridiculed and mocked for recommending PGMs, platinum group metals, when prices were low. Who's laughing now as this rips on up? You know, I was getting some crap too. I don't know why. Platinum has by far one of the best setups in the market in its entirety. And then this is what people say, oh, it hasn't gone anywhere for 14 years. And I'm like, that's exactly why I'm in it. I buy patterns. I don't buy price movements. So why would someone look at a 10-year return on platinum? That's not how you invest. I mean, guys, maybe that's the difference between lateral thinkers and linear thinkers. Linear thinkers look at history and think that the trend will continue. Lateral thinkers are looking at potential turning points and looking at the reasons of why we could potentially turn. As I get older, I think I'm understanding that I'm more of a lateral thinker than a linear thinker. I like short snippets of information. I get bogged down trying to read large amounts of data. If someone shows me a chart, I could probably figure it out pretty quick, whatever you're trying to tell me. There are trends or things that you can see in charts very quickly without any verbiage. When I start to read things and it's a gobload of verbiage, I kind of get drained. It's like, you know what, just let's get to the point here. Um, so platinum, when I look at it, it's like, man, this is a once in a very long time opportunity. You get about since 2000, which is 25 years. There's been three or four really good opportunities in the metals. Two of them existed in 2000, silver and gold. Uh, we had 2005 and 9 for palladium, 2016 for rhodium, which I don't even consider that to be a great opportunity because it's really hard to play. And now it's platinum. And now we're starting to take off. And if people still don't think it's a good opportunity, I don't know how to. It's not even about convincing them, guys. It doesn't really matter. All that matters is that the opportunity is there and that you take advantage of it. It doesn't matter who wins in an argument because the outcome will be the outcome. It doesn't matter if you win arguments. I'm not trying to convince anyone that platinum's that great, but it is. And I'm not here to make a case and convince you in particular of why XYZ person should purchase it. Um, what I'm trying to do is show you the opportunities. You guys can make up the decisions for yourself and why I would enter. So that's kind of what I see there. 5,000 years of interest rates. Our ancestors had it much worse back in ancient Egypt, where rates were very expensive. It came down in the 1700s, came way down in 1930, and a double bottom in 2000, in the 2010s and 2000s. We're starting to move back up more towards, I would say, more normalized of interest rates compared to history. You look, the average is somewhere where we're at today in this interest rate move that we've got going on so far. One of your biggest financial advantages isn't making a big one time move. It's consistently avoiding the mistakes that trip other people up. And I'm trying to figure this quote out or this saying. I don't know if it makes sense. It's consistently avoiding the mistakes that trip other people up. And one of your biggest financial advantages isn't making a big one time move. Um, so maybe what they mean by this is that the biggest financial advantages is not getting into debt, is doing the small things that are right all the time, where it gives you the big advantage. I think that's probably what they're getting at. Robert Friedland says Bloomberg on copper. Copper is up about 10.5% so far this year. It was boosted by a sharp decline in inventories on the LME. Readily available stockpiles have plunged nearly 80% this year, driven in part by a surge in imports to the US ahead of possible tariffs. Spot copper contracts have this week risen to trade at the biggest premium to the 3-month futures since February, with the widening spread indicating near-term tightness in supply. Yeah, we can see that with the copper price being up towards all-time highs. It will break. It just takes time. And then they'll just continue to keep moving higher and higher as supply cannot meet the demand out in the future. There's a big problem in copper, guys, and I don't see how it's solvable. It just means price is going to go up for a long time. U.S. crude oil inventories are now 10% below the 5-year average for this time of year. So we don't have a ton of oil inventory. I'm a little bit, frankly, confused how we got down this far in oil. Now, yes, I know speculative positioning is at lows. We had the um, Liberation Day, and then there's been a barrage of, I'll call it, I think it's fake news hitting the markets, trying to push oil prices down or keep them down. But inventories, they're getting sucked up. They're not we're not building inventories around the world. Trump said Iran has called to negotiate. And then right below it, it says oil manipulation 2.0. Iranian foreign minister to Al Jazeera, we did not send any negotiation delegation to Oman. So what's going on here? I don't know. I don't know what's going on. None of this news makes any sense. This is the United States Department of Energy stocks for the week ending 6/13. Crude oil with a massive draw of 11.5 million barrels. Gasoline up a little bit, distillate up a little bit, and Cushing down 1. Crude X SPR is minus 11.2 million barrels for this past week. That is insane, guys. Now look at crude stocks. Here they are. Does that look like we're towards the lows? Oh, we're dipping way down. That's crazy how much we're dipping. Gasoline stocks, a little bit below average. We're way down on distillate stocks for diesel. Cushing stocks are way down towards the 5-year range low. Refineries are running basically maxed out, and crude oil production isn't moving. Yeah, we'll see what happens when we get out a few years from now. We get out a few years, I think we've got problems, major problems in oil. Prices will be much higher, in my opinion, a few years out, unless they completely tank the market into a recession. I mean, that maybe they do that. Who knows? There's the EIA. Here's platinum futures. So platinum futures keep squeezing higher. This is the volatility indicator Bollinger Band bandwidth. We've got the squeeze up into the corner and the gigantic breakout. He's got a couple of potential price projections: $2,006 and $3,093 for platinum futures. Could we go much, much higher than that? We could over the duration of this bull market. We could really get heated up and blow through all that stuff easily. I think platinum is probably one of the best areas to be looking at, even still with the breakout. The breakout is analogous to the breakout of the early 2000s, and that's kind of where I think we're located, is the early 2000s, if you were to compare it to last bull market. Last bull market went up 475% in 9 years. We could see something similar to that, and that would put us over $3,100 if we get a similar return in that time frame. Rock bottom entries. Wheat has a confirmed breakout. The ag complex is flashing real inflation plus supply risk. Fertilizer stocks aren't waiting, they're screaming higher. So the soft commodities are really starting to move on up. This is wheat in particular, and we're sitting above this big volume bar. Usually when you get on top of volume, you can use that as support and you can launch from it. So yeah, wheat looks pretty good. And we are playing that too on the website here too. Here's some ratios. I thought they were really interesting. All right, so this is platinum to silver. And I know a lot of people are very bullish on silver, as am I. But check this out. So I say platinum versus silver ratio. How is platinum going to outperform silver with silver potentially breaking out of the huge cup and handle pattern? So here is the platinum to silver ratio. We've got the 3-hump consolidation that I look for. We are starting to potentially break out of this falling wedge to the upside, where platinum could outperform silver. Now, people are going to say, no way. Silver is about to just rip. I think that's my point. How could platinum go all the way up here if silver is locked and loaded and potentially ready to rip to the upside? Now, I zoomed in on the right-hand side. You can see we're potentially trying to break out. We'll see if we can close and get up way above there. But look at this silver chart here. It's a cup and handle. right there. And then the projected move is all the way up to $308. Now, that doesn't mean that platinum couldn't outperform silver somewhere between where we are today and the peak of silver. So the peak of silver generally occurs after a market crash, and then they do a bunch of stimulus. Platinum could outperform in the beginning, and silver could outperform in the end. So maybe platinum does some ridiculous run that we're in today and beats silver in the short term. Maybe. It's a maybe. I don't know the future. No one else knows the future. But when I look at this pattern, I'm like, Jesus, this thing's going to rip. And the thing that kind of gets me, this is kind of like scary good, a little bit scary, but also really good if you position in platinum. It's like if platinum outperforms silver and silver breaks out and really starts to run, what does that mean for the move in platinum? I mean, are we going to see 5, 6, 7, 8% up days in platinum with silver up 3, 4, 5%? Is that what it means? I don't know. But this chart is incredibly bullish, and I'm curious to see what happens over the next few years. Here's platinum. There's the chart in platinum. It's obviously broken out. I showed you that one earlier too. So those are the two that we're going to race. We're going to race here. We're also going to race uranium and oil. And we're going to race all of them together. This could get real interesting. And keep in mind, it's the dollar falling. So it's money flowing out of dollar-denominated assets into commodities and emerging markets, and then we're going to see which area the money flows into. Oil was going to $80+ a barrel with or without the war. It's okay. I didn't expect you to believe that, but I always have. I totally agree with him. 100% in agreement. The chart was ready to go, and I think they're using the war as an excuse. We were going 80 plus, irrespective of what happens with war. They're just going to use it for something to blame on. Again, that is my opinion. API weekly oil and products inventory report. Again, that's minus 10. So they had a 10 million barrel draw for the API. The EIA had over 11 million barrels. This is a big deal, says Lobo. The Strait of Hormuz, however you pronounce it, hasn't been closed. But if ships won't go there, it would still affect oil supply. Shipping groups are starting to shy away from the Strait of Hormuz as Israel-Iran conflict rages on. So even if they just avoid that area, it's going to be longer shipping time. Breaking, Trump's in. Okay, I think I answered that last time. So that's where we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. That's all I've got for today, guys. So we'll catch you next time. This is Finding Value.